Welcome everybody to our budget webinar this afternoon on some of the key points of the 2024 budget that we saw yesterday. I'm joined here with two of my guests, Mike Ball of Ball, Accountancy, Alex Reynolds of Butler Cook, both of whom are the managing partners and leading our accountancy group. So today we want to have a look at the budget, and we want to look at its impact, well, I think as we've all sort of said, its lack of impact on businesses. But in our typical fashion, we want to do it in a manner of looking at it from the business owner's side. And we want to look at how we can, as opposed to deal with the, quite frankly, boring aspects of an ongoing budget discussion, and look at how we can utilise things for our advantage. So we were chatting earlier on, guys, that there's no doubt this is a vote-winning budget, and actually there's very little that people seem to have seen to affect the SMEs. And in fact, I think the general consensus is that there could have been a lot more damage to SMEs as we work through this. So in line with our group mantra, we thought we'd take the approach that says we're going to look at it as business owners, we're going to look at it from the eyes of all of our clients. So we work with clients, sole traders, new startups, through to, I think, Mike, your largest client's about 7 billion international turnover. So we want to understand how we can utilise the benefits that larger businesses get from either tax regimes or the corporate advice they get. And we really wanted to bring this down to our clients and how we can all benefit from that together. So we've had a few questions in already, and we'll try and deal with them as we sort of chat, but it's quite an informal discussion. Do please drop us a line or a direct message if there's anything you'd like to address today. If we can't get to it today, what we will be doing is circulating not only the contact details of everybody that's joining us today, but also confirmation highlights and a bit more information. I think probably let's jump into one of the first ones that's come into us, and it's great, lovely to see national insurance is reduced. We like that, and I can see why that benefits my team and the people that work for me. But if I'm looking at me as a business owner, how does that benefit me?
So just go on the headline figures, Martin. So reduction of national insurance from 10% to 8% previously. 12% to 10% previously. Now it's 10% down to 8%. What does that mean as a business owner? It means that, if you're on a salary, it reduces your national insurance contributions by 2%. Roughly, what that does is that tops out at about £750, roughly, national insurance saving up to somebody earning £56,000. So it helps you as a business owner with your employees and giving them extra £750 in their pocket.
Yeah. Okay. Again, which is great, because it's nice to have a benefit, but there's always a challenge as a business owner. And one of the things we talk about with some of the larger organisations is they benefit from maximising every piece of legislation, irrespective of what a budget does or doesn't do. Is there anything that can be looked at here from an employer's position and the way they approach national insurance?
So, yes.
Yeah.
Do you want me to dive in?
Yeah.
So, I mean, obviously there's very little in there in terms of benefits to employers, because there's no change to employers, that sort of thing. Whilst the employees benefit by getting a bit more money in the pocket, we spend a lot of our time with SME shareholder directors. Obviously they have the benefit of being able to structure their remuneration packages in a perfectly vanilla way that enables them to take advantage of all the sort of tax breaks that are out there. So outside of the budget, and what is not talked about, still enables us to talk to owners about group structures, about remuneration packages, about family members and all that sort of thing. So advantageously, none of that's touched. So we can carry on having those chats.
So that's more a case of the unsaid piece in the budget. And that's because there's a lot of talk about dividends dropping, and I think the 0% drops to £500 as part of the previous legislation. But actually what you're talking about is ways in which the current regime and regulations could be used better outside of dividends, which is where as business owners we sort of go to straight away, well, I need to maximise those pieces. So there's actually more sort of structural ways that you as advisors or any of advisors that are on here today can look at to give me as a business owner.
Yes, one thing to note as well, obviously that NR reduction was on sole traders as well.
Yeah.
So it kind of narrows the gap a little bit more of sole trade versus limited company.
Okay.
Though the advantage is still there for a limited company because, as Mike alluded to, the tax planning options that are available. But that gap is wide, as short as come a little bit closer.
So it makes the advice from you guys, accountants, and a little bit more important now to keep thinking that, because the margins are tighter, so we've got to be a little bit more honed in. But this budget hasn't removed those sorts of things, and again, it's that still opportunity that hasn't been impacted by its silence, shall we say?
Correct.
Yeah, and I think also when we talk to clients, you focus on the bottom line, you focus on the cash position, and there's always a view as to what they can get out, and therefore minimising, tax positions. But a lot of the time, it's really looking at the bigger picture and understanding what's going on in the in the whole gambit of what clients have got going on, and sometimes minimising what they take out, minimising national insurance and tax, and just structuring it in a way that means it works for everybody.
Okay, cool. Thank you. And obviously, as we go through today, people watching are going to have some further questions. Of course, speak to your accountants, your advisors, contact us through our pieces, because I think what's key is I'm taking from this is we've got to look at the individual pieces. So the budget hasn't hammered some of the opportunities, but we still need to take individual scenarios.
I think it's make things you have to be a little bit cuter and think things through a little bit more and do the calculations. We'll touch on it later about the high income child benefit charge. Again, that changes your calculations for best way to extract profit from your business. I think you need to talk with your accountant. If you've got any questions, direct them to us. But you need to be a little bit more accurate with your calculations on what's the best way to remunerate yourself from your own business.
Okay, thank you. That was an interesting one. Somebody's asked a question. It's great. There's an increase in the VAT threshold, but that just seems a bit more like a vote winner. And I think if we look at it in real terms, you were talking, Alex, earlier about actually if we'd have carried on in line with inflation, etc., it would have been a different number.
Yes, it'd have been north of 100,000, it's about 105,000 if VAT threshold increased with inflation. I think the more sceptical among us will just say, well, those guys who were underneath the threshold at 85 will be miraculously having a turnover of £89,000 worth of sales. But
why not? You've got to maximise the opportunity.
Exactly. One of the things that hasn't been touched is just the threshold that was spoken about. We haven't changed any of the other allowance thresholds for cash accounting or flat rate scheme or anything like that.
Okay, and so that, because the cash accounting is available to everybody. The VAT flat rate scheme as well, which has its definite wins. I think that's something that's available to people, but also something again, it's one of those things that not a lot of people know that it's there, and it's promoted by HMRC, I think.
I think the thing to remember all of this is that you don't look at these things in isolation, right? The VAT registration level at £90,000 now isn't something that you just look at less than that you don't register, and above you do. It's about looking at who do you sell to? Are they VAT registered? Is it going to be a cost to them? If you're selling to the general public and householders, then it is. So I think it's the lesson there is look at the big picture. Look at what it means to your customers and to yourself. You might be turning over 50 grand a year, and depending on who you're selling to, it might be advantageous to register for VAT, right?
Because you'd utilise that possible margin that's available on using the VAT flat rate.
Well, in the flat rate scheme, there's obviously, and if people want to understand that more, they can obviously give us a shout. But there's VAT profit to be made on the flat rate scheme, but also just in the standard VAT registration. If you've got a customer that can claim the VAT back, but you're not claiming your input VAT, well, you might as well register early and get the advantages there. So it's about, again, I'll say a lot, it's about understanding the big picture, right?
And what suits. Okay, brilliant. Thank you, guys. Unsurprisingly, I've got a couple of holiday lets, and I think it was an interesting one looking at that, because as he started on that, it seems to be a little bit of noise, but not a lot of detail maybe at the moment. But I wonder whether some people actually, it's provoked a thought that some of us have looked and thought, I didn't realise I could claim some of those reliefs. So it was quite an interesting one. But if I've just realised that, and someone says here, they've got 2 points on this, so I'm now thinking of selling it because I can't get any reliefs. Are we saying those reliefs that I didn't know about are no longer there, or even if I did know about them, they've disappeared? And then on the back of that, with the capital gains piece, you know what, with all that not going, it's now the best time to sell and maximise that opportunity of the main piece that drops 28% to 24%.
Yeah, so I think, you know, like I said, to begin with, there's not much detail around this. It's just we've from April 2025, the furnished holiday lets treatment is going to be removed.
Yeah.
You know, basically that means no 100% mortgage write-off, no potential of business asset disposal relief, which is basically 10% capital gains tax. And an important one, which a lot of people miss, is the capital allowances claims.
Yeah.
On your, let's say, plant machinery, furniture, fixtures, and office equipment and things like that. So
have I missed that then? So I've not been claiming it.
Yeah.
And they've now reduced that. Have I looked out?
So again, it'd be something that would have to look at on an individual basis, but you know, there is a potential where people have not claimed the allowances they could have claimed on previous tax returns for capital allowances in furnished holiday lets. It's quite a common thing that's missed out.
So can I go back?
There is potential to go back and maybe
so-
potentially relook at that and you know, refile a return, for example.
Okay.
I think it's always
Yeah.
amazing as well when clients come to us that have got significant holiday homes, where they're just not claiming any allowances at all.
Yeah.
So yes, there's the opportunity to go back, but you know, there will be a significant proportion of the holiday let population that aren't claiming what they can do
Already.
And it's not just the stuff that you've got in it, it's the stuff that it's built of as well, right?
Okay.
So you know, a lot of the mechanics within a holiday let can be claimed.
Right. Okay. Yeah. Which is these fixtures and fittings that.
Yeah, especially when people do renovations and quite a common thing where, you know, they just claim the renovations. There's opportunities within that renovation piece. There's some capital allowances to claim to offset against holiday let profits.
So you've not missed out. You can. I think it comes in June next year. Is it?
Sorry, April 25.
April 25.
Yeah.
So there's a year to work it out.
Time to phone up to your advisor and have a conversation.
You can go back 2 years. But and also only apply the legislation that look at changes only as an individual.
Yes.
So lots of opportunity to look at potentially incorporating those.
So if it's worthwhile, I can put my couple of holiday lets into a limited entity.
Yes.
And then that then is not affecting me with this change in the budget.
So that's one of the options to look at, is potentially, you know, once the detailed legislation is out, you know, and
which you'll be reading, not me as a business owner. Yeah, good. Okay.
Yeah, of course. You know, then it's then about planning what is the best thing to do. First thing that people think of, well, I'll just have to sell. Well, you know, that's you know, that's not the first thing which I think about. Okay, how can we structure it more tax efficiently to be within the new guidelines, with new legislation, and still make that holiday let work for you.
I'll also think, you know, the bigger picture piece, whether it's holiday lets or whether it's residential property that you rent out. People will look at those in isolation and think, I don't want to incorporate those because of the stamp duty charge. Well, in this case, the stamp duty charge of incorporating maybe far less than the advantage you'll gain by putting it in corporate. Yeah. And there's ways that you can incorporate properties, be it residential or
and it gets back to using the regulatory rules that are out there to their fullest. You don't need to create a scheme for that sort of thing. It's about utilising what's there and ready.
You do things in the right way, and it's all really vanilla.
Yeah. Okay. Brilliant. Thank you. The corporation tax was potentially a bit of an issue because there was, you know, concerns. Certain people suggesting it should be changed and increased, and the burden should be changed. So it's good news to see that there's nothing too painful for us. I like that. Do you guys have any views on the current thresholds? We touched on it a little bit before about looking at that bigger picture and structures, but we naturally focus on the current thresholds and the possible dividend piece. Any thoughts as to how we can get some benefits out of that?
So you know, you talk about corporation tax. We'd already been hit by that because it's already been, you know, for larger for profits over 250, it's 25%, which is quite a big jump from 19% the previous tax year to 25%. So that was the big hit last year. So we've already taken that. I think most people would like to have seen corporation tax go down as business owners, but it hasn't. It stayed the same. So corporation tax rates stay the same as last year, and so the dividend allowances of what's already been announced previously.
Okay. Okay. So again, there's no pay income from suddenly causing us problems with pension contributions.
So yeah, with the pension contributions, obviously, with especially for businesses that are profits at over 250,000, you're getting a 25% corporation tax relief on those on those company pension contributions into directors' pension.
Okay. Okay.
And again, looking at big picture, I think it's just, look, it's a what you know scenario, isn't it? It's making sure that whoever's advising you or whoever you're talking to as a business owner knows all the opportunities to mitigate corporation tax in this scenario. We speak about pensions. You know, we've got a lot of clients that are now buying commercial property that they're in rather than renting it, and taking the advantages of putting that through the pension scheme that they're in full control of. You can obviously borrow in pension schemes. So, you know, when you start doing the maths on all those things,
and ensuring you've got you maximised who is drawing a dividend and how they draw that dividend, and everybody, whether that's, you know, your group of shareholders are the right people, and it's amazing how many opportunities that go unmissed by, again, not looking at those individual scenarios
and making sure that when you incorporate, so day one, it's important to plan for year 5 or 10 or whatever.
And that might be how you structure it with other people's shareholdings, etc.
Correct.
Okay. Yeah. Interesting. I think it's a big lesson. We sort of do things for the here and now. The more as a business owner I understand the opportunities at this stage and the other stage in my business, makes me think twice about how I set that up. Yeah. Okay. Alex, you know, I'd like to get you a little bit technical because that's always good. So the Chancellor brushed around a little bit this opportunity for fully expensed leases. And it's useful to know, because I often believe that having owned businesses that were very asset and capital intense, I realised early on years ago with some of my advisors, they didn't really understand all my maximum opportunities for capital allowances, etc. So whether that's as a business you're buying equipment, machinery, or just a couple of vans or whatever, it's really important we get that. You touched on fully expensing leased assets. What's your thoughts on that?
So, two things. So, it's using like the capital allowances umbrella. So, what he said is that fully expensed assets continue. That was announced last time. That will continue. That means that we've got two ways we can claim 100% capital allowance. Basically, the annual investment allowance, which has been around for a little while now, which is £1 million. That actual annual investment allowance is for group and connected companies. So something that's quite often missed. It's not each individual company that has the annual investment allowance, it's a group of companies. That's something that I think we've come across quite recently, that somebody's missed, and it's obviously quite an expensive miss across a big group.
Yeah, absolutely.
The fully expensed assets is kind of like an extension of that. Is that for bigger businesses, they can take advantage of the fully expensed assets element and continue to claim the 100% asset relief. Now, you mentioned leased assets. So if I'm a leasing company, I can lease you an asset, and I can claim the annual investment allowance on that up to £1 million. What I can't do is I can't claim it as a expensed asset. The Chancellor said that it was something that he was going to look at.
So there's every chance actually that's going to be quite a big leap forward for SME businesses, depending on when he does it and how he does it. But the suggestion,
I think he said when we can afford it. I don't know how that quite works.
Well, there's all sorts of political answers to that, and dependence on the next election, I guess. But the theory is that could drop in and
what we're trying to do is trying to increase asset investment. Which obviously fuels the economy. So then you've got the VAT, you've got the productivity and all those kind of things. So that's the idea behind it. But when we can afford it, who knows?
No, that's a good one. So I think it'd be useful, again, that you mentioned briefly on the child benefit changes. I just think, whilst as a business owner, your first is, well, that's not really affecting me, but actually it is, because there's a couple of points in there.
There's a couple of points. One is what it sneaks up on people, especially when they're a sole trader, for example, and they're earning over the £50,000 mark, and it gets the child benefit charge, the high income child benefit charge is calculated based on your earned income, and some people get caught out by that. So there's that element. But the most important one is for normally it's employees, because normally directors and shareholders are structured their remuneration so to be as tax efficient as possible. It's for the employees, the guys who get paid between 50 and 60,000 pounds. The effective rate of tax when you're losing your child benefit is, I think it's 65-66%, and it's probably one of the highest rates of tax in like G20, I think. So it's very expensive for people to get a pay rise from 50,000.
If you can hear that in the background, if anyone wants a sandwich, I think the team have just arrived.
But it's very expensive. If you get a pay rise from 50 to 55,000 pounds, you don't see much of it in your pocket, because it all goes back to HMRC. So it's been lobbied by lots of different people, and they've obviously extended that up to 60,000 pounds and increased the run-off period as well up to 80. So it lessens the blow on what I'd say is middle in England.
Absolutely.
Having to pay back, their salary at 65%.
Significant.
So, yes, significant. And I think we were talking earlier. If you've got a let's say a manager in the business who's on that salary, they get it plus the NI. I think the calculation was at £60,000. You're getting a £1,500-1,700 back in your in your pocket.
Really?
So from a business owner's point of view, that's very useful to know that your staff are receiving that in the next tax year without you having to give them a pay rise. You give them a pay rise, they're getting £1,700 plus the extra. So it's quite good for your senior members of staff.
Okay, cool. Another question that's come in, literally just come in on R&D, and I think this is a case of another area that is interesting by the significance of the silence on the subject. So Chancellor didn't talk about R&D. We know it's featured quite a lot in sort of bit headline grabbing at times, and this question is very direct and to the point. I've been told it's a waste of time claiming, so I'm not going to bother. What's your thoughts? That's, as we know, something quite close to my heart. And from April, there's the consolidation of the two schemes, RDEC and the SME scheme, into a single scheme, which by nature of that means is that runs through advisors, whether it be your accountants, your R&D advisors, whatever, could be dealing with 4 different types of schemes for a client, the way it'll all mix over. So has it become too complicated? And is it actually just not worth doing anymore?
Can I pick up? So big picture. So I've got a lot of clients, a lot of significant clients that make R&D claims, and they're all bona fide. I have quite a big frustration in that part of the market, in that I think there's a lot of chatter in that area that scares people away from doing R&D claims, which I think is intentional, and I think is effective. But in reality, it shouldn't be something that people are worrying about. If you look at your tax return, it's the box next to the capital allowances claim, right? It's completely vanilla. As long as you're doing a bona fide claim under the right bits of the regulations, then I think everybody should do it. So, is it a waste of time if you've got a client or an SME that wants to make a bona fide claim? Absolutely not. If you engage the right people to do it, then it's a relatively simple process. Then it comes down to the technical bits of putting it through and that being successful, right? So,
and I think the R&D was set up to be simple to help people claim it. The problem is it was abused.
So
the reason it's complicated is because people have abused it, and the guys who and the companies that really need it, it's actually starting to become a barrier, and it shouldn't be, because it's a very useful.
Well, it's it's a way of driving innovation, and we can talk about what that does to the economy and everything that drives through, that's supporting people to do it. And we have heard a sledgehammer to crack a nut in terms of dealing with the problem. So I guess what we're saying is, hopefully, by the silence in the budget, even ignoring the fact this is about winning votes, by the silence in the budget, maybe they think they've got themselves to a position where they're policing it better. So our answer is, if you've got a claim, absolutely do it. If you're not sure if you've got a claim, talk to a decent advisor. Again, we can introduce, and there may be people on here that offer that service, of which we're delighted to talk to as well. But that's the key, is still very much worth it. Once this washes through, and the single scheme is eventually going to be better for everybody anyway, I guess. Yeah.
But it's going to be simpler, and I think it'll make people more confident and comfortable in terms of making the claim. But again,
Yeah.
from my point of view, I don't see any reason why people shouldn't be on
Yeah.
that train and claiming it.
Yeah. Okay. Income tax. We haven't got an awful lot longer, so we're just going to touch on this one. There's been no increase in the personal allowance.
No.
So some sort of say that's there's good, bad, indifference. But with the inflationary increases, we've got this phrase of fiscal drag that various newsreaders and politicians like to chuck around, and most of whom probably don't understand it. But just to give us a bit of feedback, Alex, or Mike, what's your view on that and the impact for us? And again, anything we should be looking at when we look at that big picture?
I think the thing with the freezing the personal allowance, it contradicts the increase then in minimum wages.
Yeah.
So that's one thing that obviously a lot of people miss, is the increase in national minimum wages.
One in April.
Correct. Yeah. So
Yeah.
something that, again, that we talk to our clients about, help them with the payroll and make sure that their staff are being paid within the legislation. So the personal allowance not going up is quite a big thing for especially those people on lower hours.
Yeah.
They might end up getting dragged into paying tax when they haven't done previously.
Yeah.
So that's the only.
Yeah, thing to be aware of. But again, Mike, when we talk about some sort of collective strategic approach, opportunities still.
Yeah, I mean, from the personal allowance point of view and that sort of thing, just a sweeping statement is, how old do you need to be to have a personal allowance? Well, 1 day old, right?
Yeah.
So if you then start looking at that, then whether the personal allowance has gone up by 5%.
Yeah.
If you can structure things in a way that is legal and simple and benefit from the opportunities out
and that's
there.
the key, isn't it? Simplicity.
Because
people get a bit ahead of themselves, and I'm sure many people on this call, and myself included, we've been spoken to about such and such strategy scheme or what have you. Actually, you don't need to do that.
Nope.
It's about understanding the rules properly, keeping it simple, but making that opportunity available to all of us.
Yeah, start with a blank sheet of paper and get good advice from day one.
Brilliant. Okay, guys. Well, look, really appreciate you giving us a bit of time. I hope everybody on this call has found it useful. I certainly have. What we are going to do is we'll distribute Mike and Alex's contact details and myself. We will be producing a small bulletin on this. We do have a variety of webinars, podcasts, and various other bits and bobs coming together, because this is really about getting the right advisors onto the same side of the table as business owners. We need to get the right advice out to us quicker and better and clearer, and demystify some of the dark arts that sometimes professional services, perhaps unintentionally or intentionally, have, and that we as business owners can really get that value. So please do look out for further postings, further webinars. If you have any questions, anything, DM me, drop us a line. But I look forward to speaking to you all soon. Have a great afternoon. Thank you. Bye-bye.